Hey guys, how we doing? How was lunch? All right. So I wanted to we're gonna give it about 5 more minutes for you guys to finish up and come back to your seats. Before that, I just want to share a quick video. Who knows what we do here at our center? Okay, so there's a lot of people that maybe aren't aware of what we do here, and I wanted to share with you guys a quick highlight reel of all the things that we've done for the last 1.5 years, so you have an idea of what it is that we actually do here. And then we'll roll into our next speaker, okay? All right, guys, here we go.
Yeah. 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 Perfect. Okay. You're welcome. Anybody have any garbage for me to take away from you? Everybody good? This one? Oh, you took this handsome man under your wing. Old buddy.
All right, guys, I just want to, hopefully you guys were able to see some of that, but I want to give a shout out to Debbie real quick. Debbie, if you guys haven't met her yet, if you have questions about our senior daycare center, she's our executive director. So if you have any questions about what we do here, if you'd like to learn more about it, please ask her. And then a shout out to Samantha Reyes back in the back here. She's our executive director for our assisted living facility. And of course, Amy Conti, senior resource specialist here for Chelsea Place. And I think Pam's somewhere in the room too. Just want to give her a shout out. Well, she's one of our activity coordinators at our senior daycare center here. So we're going to roll into our next speakers. So we got Dave up, and then we got Larry, and then we have Ivy coming for the afternoon. Yep, and I'm going to have Amanda Barton. She's going to introduce to you guys Dave and what he's going to be talking about today. So Amanda from Seniors Blue Book, here we go.
Okay. How did you guys enjoy your lunch? Wasn't that fantastic? We would like to give a shout out to the Charlotte Memorial Funeral Home and Dave with the insurance guys for co-sponsoring the lunch today. We appreciate that. Let's give them a round of applause. So it is, again, my pleasure to introduce someone I can definitely consider a personal friend as well, Dave Marziale with the... See, I knew it. Marziale with the insurance guys, and this is the expert knowledge that you want to get when it comes to Medicare, Medicaid. He's a wealth of knowledge, so without further ado.
Thank you. Thank you, Amanda. Thank you very much. I appreciate it. I'm so happy. I didn't ask Amanda for this, but I'm so happy to be speaking after lunch, not before lunch, because I know that before lunch everybody's thinking about lunch. Now you're all happy. Hopefully everybody's happy and has got a full stomach and can think about what I'm going to talk to you about. The good thing is you don't have to remember anything that I tell you, because my cards are in the back, and you have any questions, you want to go over anything, you call me up anytime. That's what I'm there for. What I do is I educate people. I'm an independent insurance agent. I've been doing this for 14 years. It's important to be with an independent agent. There are two types of insurance agents. Does anybody know the other type besides independent? Well, you're close. Captive. They call it captive. And a captive agent is an employee of an insurance company. He's trying to sell you something. An independent agent deals with all the insurance companies. He's trying to educate you and see if there's a match between your needs and one of the products that his insurance company offers. So if you see somebody with a business card that's got the name of an insurance company on it, chances are they're a captive agent. Mine does not have the name of an insurance company. So I'm here. It's a great topic, Medicare versus Medicaid. In fact, I got a call the other day from somebody who said, "Can you be on Medicaid and not Medicare?" This is somebody that really didn't understand the two programs. So it's very complicated, and it's important to know because they sound alike. They were both started in 1965. They're both government programs, but they're very different. One is a federal program, and one is a joint federal-state program. Which one do you think is the federal program, Medicare or Medicaid?
Medicare.
Medicare, you're right, absolutely. That's a federal program. Medicaid is funded by the federal government. It's run by the states. So your Medicaid is going to be different in Florida than it will be in New York or Connecticut, other states that I've practiced in before. Medicaid, as Mary did a fantastic job of telling you, is based on your income and your assets. Medicaid is for people in need, needy people in this country, and there should be no stigma attached to anybody who gets Medicaid because this country has decided, I think very wisely, that we're going to have a safety net for everybody. And Medicaid is part of the safety net. If you're in need and you qualify for it, you're entitled to it, and you should have it, and that's fine. Medicare, on the other hand, is for people who are 65 or older or who've been disabled for 24 months. I do have clients who are as young as 21 years old because they've been disabled for 24 months. But most of the folks are 65 years or older. But Medicare and Medicaid are, I say they're like having a dog and a cat. You can own a dog, you can own a cat, you can have a dog and a cat, or you can have neither. And that's what Medicare and Medicaid, how they relate to each other. Some people have one, some people have both, some people have neither. So a few stats. There are 59.7 million people on Medicare in the United States, 4.3 million of them in Florida alone. And in Charlotte County, one of the reasons I love Charlotte County, aside from the fact that we're the baseball capital of the world, and I'm a huge baseball fan, we've got baseball teams all over the place, but we also have one of the highest percentages of senior citizens, people on Medicare, of any place in the country. It used to be #1 until they built the villages. It's now the #2 county in terms of percentage of senior citizens. So I'm happy to see all of you here because all of you are the people that I serve and my potential clients or my friends. 4.3 million. In Medicaid, there are 74.8 million people on Medicaid, and 3.1 million of those in Florida. Now, the people who have both Medicaid and Medicare, we call them dual eligible. And there are 9.2 million of them in the nation and 818,000 in Florida. So those are people that have both Medicare and Medicaid. Now, the reason that health insurance is so important is because I don't have to tell you guys the cost of Medicare, medical coverage, medical services is just getting higher and higher every year. Last year there were 643,000 bankruptcies in the United States, and as much as 25% of those bankruptcies were the result of medical expenses. So people are, you fell on the back nose, you guys know what I'm talking about. And so that's one of the reasons that they founded Medicare back in 1965. Does anybody know what the life expectancy was? The average life expectancy back in 1965. I know you guys are too young to remember 1965, but does anybody have any idea what it was?
70?
Very close. 69. 69. My grandfather, God bless his soul, died when he was like 63. Many people died in their early 60s. And that's one of the reasons they set the Medicare age at 65. They figured there wouldn't be too many people using it because a lot of folks died before they were 65. Now, does anybody know what the life expectancy is today? 88. Very close. 79, but if you're fortunate enough to live to 65, at age 65, you can expect to live to 87, and it's getting higher every year. Why is that? That's one of the reasons. So part of it is medical science, improved medical facilities, but part of it is because of Medicare. Medicare is arguably the most successful government program in history. It is a fantastic program. The problem with Medicare is that, as we said, back in 1965, there were many, many, many people, all the baby boomers were working, getting jobs, starting their careers, you know, and very few people have Medicare. Well, now the situation is kind of reversed, right? You know, all of us baby boomers, we're on Medicare, right? and what about who's supporting it? You know, there are fewer and fewer people in the workplace every year. So over the course of time, what they've had to do is raise the out-of-pocket costs. It used to cost maybe $1 or $2 to go to the hospital. Now, if you have Medicare A and B, and you go to the hospital, they're going to charge you $1,364 to walk in the door. And then you're subjected to 20% of what the doctors do to you. It's not uncommon for somebody to go to the hospital on Medicare A and B and pay for 3 days and pay $5,000, $6,000, $7,000. That's absurd. That's why you need some type of medical supplemental insurance. Now, there are two types of supplemental insurance. One is a Medicare supplement plan. One is a Medicare Advantage plan. One is pay up front. One is pay as you go. Medicare supplement plan, you pay up front. You pay upwards of $200 to $250, as our last speaker was talking about, for a Medicare supplement plan. But that will pay all or most of your medical costs. With a Medicare Advantage plan, you pay as little as $0 every month. But you pay a small co-payment when you go to the doctors or you go to the hospital. Now, somebody said to me today, how can you give me something for free? It's not free. It's $0 cost. We're not allowed to tell you it's free because it's not free. It's something you've already paid for. All of your life, you've paid for Medicare Part A. When you're working, they take a little deduction called FICA out of your paycheck. That FICA deduction, that's for your Medicare Part A, Medicare hospital coverage. And right now, as our last speaker noted, you're paying about $135 a month for Medicare Part B. All of that money goes to the Medicare agency in Washington. And for everybody who's on a Medicare Advantage plan, the Medicare agency sends the money back to the insurance company. Now, there are some plans that, Advantage plans, that have even richer benefits that the insurance companies charge for, but because of the volume of people in Florida, we have a multitude of zero premium plans in Florida, which every provider has zero premium plans, and they're fantastic plans. unless you've got a special need, nobody really needs to pay for your Medicare insurance because you've already paid for it. You can get it for zero. You know, it's the old Sam Walton principle. Anybody remember Sam Walton? He founded Walmart. Sam Walton once said, "It's easier to sell 1 million people something for $1 than one person something for $1 million." That was his motto. That's how it works in Florida. There's so many of us, and I'm on Medicare myself, so many of us on Medicare that they could do it for zero premium. Question? You have a question? Oh, I thought you were raising your hand. So that's how that works. Now, there are two types of Medicare plans. There are many types, but in this area, there are basically two types. Both are network plans, Medicare Advantage plans. One is called an HMO, and one is called a PPO. Both of them have networks. The difference is, with the HMO, you must stay in network, and you have to get approval for certain procedures. With and you have to get referrals for specialists, which is typically fairly easy. The doctors around here know how to do that. With a PPO, you can go in or out of network, and there are no pre-approvals, no pre-authorizations. Typically, you're going to pay higher co-payments for the PPO than you are for the HMO. But the PPO, you can get PPOs and HMOs for zero premium. And most of them do have drug plans as well. If you get a Medicare supplement plan, you need to get a Part D drug plan. We offer those as well. Those typically run from about $35 to $80 a month. But we got some that are cheaper, that are in the 20s. But the Advantage plan is kind of an all-in-one thing. What we like to say, one drug plan, one medical plan, one company, and one agent. You know, and you sign up with me, I become your agent. My motto is I work for you. If you have any questions, you have any issues, you call me. You need me to visit your home, I visit your home. I give you personal attention. You don't pay for that. The insurance company pays for that. You get my services at no cost. So that's how that works. Now, Medicaid. How does Medicaid work? Well, if you meet the income requirements that Mary was talking about with respect to Medicaid and the asset requirements, you basically pay nothing. You pay nothing for your doctor. You pay nothing for your specialist. You pay nothing for your hospital. That's all covered by your Medicaid. In addition, the Medicaid plans cover dental coverage and vision coverage. Now, these plans, as I told you, are run by the states. In many states, the state themselves kind of run the Medicaid plans. In the state of Florida, they have farmed it out to 16 different insurance companies. In Charlotte County, Staywell, Sunshine Health, and Humana are providers of basic Medicaid services. And so if you're on Medicaid, you would be assigned one of those plans. However, we also offer what are called special needs plans. And United Healthcare has tremendous special needs plans in Florida, in Charlotte County, that provide slightly more benefits than the Staywell plan would. Not a lot more, you get a little bit more. But the key thing with the United Healthcare plan is that you get to go to any of the doctors, providers, hospitals in the United Healthcare Florida network, whether they accept Medicaid or not. And in the state of Florida, 29.1% of doctors do not accept Medicaid, do not accept it. And that figure is going up because medical costs are going up, and they don't like the reimbursement rates, you know. So if you have the United Healthcare Special Needs Plan, you can go to any United Healthcare doctor. You don't have to worry about whether they accept Medicaid or not. So that's one reason why we like to offer those plans. Also, anybody on Medicaid can change their plan once a quarter, 4 times a year. If you're on Medicare and you want to get into a Medicare Advantage plan, you can only do it once a year, basically. Now you can do, it's kind of like 1.5 now. The open enrollment period for everybody is October 15th to December 7th. I like to tell people I work 7 weeks a year because that's when I work like a dog. I work like a cat the rest of the year. The rest of the year I go to a lot of baseball games and I work 1 or 2 days a week. But I do things like this. It gives me a chance to reach out to the public. But I do a lot of work between October 15th and December 7th. That's when anybody can enroll in a Medicare Advantage plan. However, if you have a Medicare Advantage plan and you don't particularly like it, we can change it between January 1st and March 31st. Now that's called the open enrollment period. So you have two periods. You're locked into your plan basically the rest of the year. However, the company is also locked into giving you those benefits for the rest of the year. So if they say it costs $0 to go to see your doctor, it's not going to start costing you money. It's going to be $0 all year long, you know. But they can change the plans every year. And that's why it's important to deal with an agent like myself, because every year, around July, I have to get certified by all the companies and learn all the changes in the laws. And in August, I start going to presentations by all the insurance companies for agents telling us what the plans are going to be for the coming year. And on October 1st, we can start, September 1st, we can start talking about the plans, and we can show you the plans on October 1st, and we can sign you up on October 15th. All this is regulated by the government, which is good. We are basically, with the Medicare Advantage and the Part D drug plans, we are selling you a private version of a government program. So they're regulated by the government. We must abide by all the regulations. We are not allowed to use the word free, for example. I'm not allowed to hand out my business cards to everybody. I've got them in the back of the room, and if you want them, you can take them. But there's certain things we're allowed to do, certain things we're not allowed to do, and that's good. That's for your protection. They don't want some hustler coming in trying to sell you something. You know, I'm here as an educational resource for you. Again, I've done this for 14 years. I've got about 5 agents that work for me, and you know, I help to educate them as well. And so I am something of what you might call an expert in this field. But I'm happy to answer any questions or talk to anybody who's got any problems, whether or not they're my clients or not. So, anybody have any questions at this point? There must be some questions. No questions? Did I cover everything? I couldn't have covered everything. Well, okay. I'm married to a fantastic, yes?
On the Medicare Advantage, can you go to any doctor?
Excellent question. No, you cannot go to any doctor. In this plan, there are some Advantage plans in some areas that you can go to any doctor. They're called private fee-for-service plans. There might be 1 or 2 in this area. Most of the plans in this area are either HMOs or PPOs. And with an HMO, you must stay in network. You must go to a network doctor. With a PPO, you can go in or out of network. So you can go to any doctor that will accept the plan with a PPO. You have a lot more flexibility.
Does that apply out of state?
Out of state, you need to go to a provider that is contracted with the insurance company. So United Healthcare has a tremendous travel program. Aetna's got a travel program. Humanta's got a travel program. So depending, that's one of the factors that I take into consideration when deciding which plan to show you. One of them is, do you go out of state? And if you go out of state, where do you go out of state? We find out where the providers are. Who are your providers in state? Are your providers in network? And that sort of thing. There are certain, I basically decide which plans to present based on what I think is going to be best for you. However, if I get into a presentation, you say, I don't like that, well, then we try something else, you know, because we've got other options, you know. Yes?
Yeah. Does a person like you just switch from Medicare into Medicaid?
I'm sorry, what was that?
I say, if you're on Medicare now and you think you can qualify with Medicaid, do you take care of that?
No, I don't.
Individual?
No, I don't. You need to go to the county the county will has an office that will provide that county. The county will determine whether or not you qualify for Medicaid. But if you do qualify for Medicaid, then you can talk to me about what your options might be for health coverage. But no, we don't make those determinations. The government does. Any other questions? Mary did a tremendous job. She really cut my presentation in half because she did a tremendous job in doing the Medicaid coverage. So I am in debt to her, But okay, well, thanks again, folks. It's been great talking to you. And my cards are in the back. Come up and talk to me. I'm going to hang around. I'll be here. If you have any questions, otherwise, take my card. If you have any questions in the future, call me. As I always tell my clients, Lord willing, I'm going to be doing this for another 15, 20 years because it's not hard work. This is not like I'm not digging ditches or building bridges out there. I'm basically talking to nice people like you, and it's not hard. I can do this when I'm 80. Thank you. Thank you.
Thank you, Dave. Appreciate it. And so, guys, we're going to roll into our next speaker. We're talking about reverse mortgages. Of course, if you have any questions in regards to Medicare, Medicaid, feel free to ask David in the back. Larry's going to talk about reverse mortgages and how those work, and he can go into some more depth about that information. So, Larry, I'm going to let you take the mic, and we got a little podium for you.
Thank you.
The only thing is that if you get the mic too close to the speaker, it'll.
I'm going to slide it.
Perfect.
Good afternoon, everyone.
Hi, Larry.
First, I'd like to thank my friends from Senior Blue Book for inviting me here today. And, of course, I'm here to talk to you a little bit about reverse mortgages. How many people in the room own a home? That's a lot of hands. Okay, that's what I'm here to talk about. Reverse mortgages, I've been doing this a long time. I've been in the mortgage industry since 2001. And I didn't always do reverse mortgages. I always did forward mortgages.
Louder, sir.
Oh, do I have to get, is that better? Sorry about that. I'm not used to holding one of these. I began my career in the mortgage industry in 2001, and I didn't always do reverse mortgages. After dealing with a lot of folks for years and years who came to me asking about refinancing their home, and I couldn't help them, I realized I was missing one of the programs that could help them. And so I became proficient in understanding how a reverse mortgage could help those people that were otherwise ineligible. The reason being is because so many of us are on fixed incomes, and unfortunately, if you're on a fixed income, generally speaking, because there's a debt ratio that has to be met, you can't qualify for a forward mortgage in some cases. We have some of it in the room may have experienced that, I'm not sure. But nonetheless, I wanted to talk a little bit about the reverse mortgage basics to start with. There's a lot of misconceptions. I don't know if you've all ever looked at a reverse mortgage or considered one, but one of the things is a reverse mortgage, the lender owns my home. How many people in the room believe that? Anybody? Good, glad to see, no hands raised. The lender is only putting a lien on your home, just like a forward mortgage lender would do. A reverse mortgage lender is doing the same exact.
Can you use the mic? Because I can't hear you.
Do you have a flip by any chance?
I sure do, yeah.
That would sure be.
Let's talk about the lapel. You need to cover it.
Thank you very much. A lot easier.
Man, who hired this tech guy?
Not really. Thanks a lot. Appreciate
Put it on your jacket.
All right, perfect. Can everyone hear me now? Excellent. Sorry about that. Don't worry about it. Okay. All right. So there's a couple things everyone needs to know, of course, to qualify for a reverse mortgage. You have to be age 62 or older. That's the first thing. It has to be your primary residence as well. And there are some components to it as well, such as credit. A lot of people think, well, on a reverse mortgage, I don't have to make a mortgage payment. Why would credit be a component of that? It's to make sure that you can pay your taxes and your insurance and keep the home maintained. Those are the three biggest factors in a reverse mortgage. Those are the things that protect you as a homeowner. If you ever obtain a reverse mortgage, you have to make sure that you can afford to pay your taxes, you can afford to keep your insurance premium up, and you can afford to keep the home maintained. So those are the only reasons a lender would ever approach you after you obtained a reverse mortgage. I just wanted to mention that. So how much money can a person obtain in a reverse mortgage? It really depends on your age, the interest rate that is available to you, and whether or not the home is going to appraise for a certain amount of money. If you own the home free and clear and you're older, you qualify for more of your equity. So that's one of the things that I wanted to mention to you. A part of a reverse mortgage that has changed, a lot of people have misunderstood a lot of the things about reverse mortgages, but they're all insured by the FHA and they're backed by HUD. So the FHA insures a mortgage and makes sure that the consumers are protected by issuing insurance up front, mortgage insurance premium. That guarantees the lender and the consumer are protected at all times. So that in the event that the home, you extracted enough of your equity and the home value had dropped or exceeded or dropped down to the point where the mortgage balance exceeded the value of the home, you would not be responsible for that. The FHA would. It also makes sure that the equity that is in the home, you're eligible to receive at a certain level. So let's talk about the step-by-step part of it. A reverse mortgage requires an education. You have to actually, we usually sit down with you and go over all the features and benefits of it. Make sure you clearly understand how it could work for you. It doesn't always work for everybody. It does require independent counseling, which is unusual in a mortgage. If you do qualify for a mortgage and I explain the program to you and you like what you hear, prior to making application, you have to actually do mandatory counseling. That's one of the things that you have to understand about it. Then, when you make application and you have the counseling completed, you can go into the process of application. And then, of course, an appraisal will ultimately dictate the value of your property. The amount of money that you're eligible for, again, depends on your age, the property value, and the interest rate. There's two types of loan programs that you could obtain: a fixed rate mortgage. And in a fixed rate mortgage, you have to take a lump sum of your equity out at the onset of the loan. And then you're not able to actually utilize it any further. You take that fixed amount of money that you want and use that for whatever purpose you feel you need to. Otherwise, if you wanted to, you could take an adjustable rate mortgage and it would allow you a variety of different options. You could take a lump sum of cash, you could take a monthly amount of money, or you could just get a line of credit, or you could do all of those things. It can also be utilized to eliminate the existing mortgage that you may have. So you could extinguish your mortgage as well. The requirements, actually, I want to share with you a story of a client that I had recently interacted with. They owned their home for 30 years. And I sat with them, and it was a senior gal all by herself. And she needed some money for home improvements. And she was on a fixed income, and she asked about an equity line of credit. Unfortunately, she was ineligible for an equity line of credit due to the improvements that needed to be done in the home, so she was really caught in a hard place. So I sat with her and I helped her understand the way she could use her equity in her home to obtain a reverse mortgage, which we actually extinguished an equity line of credit. And then we were able to get her a lump sum of cash to do some home improvements. And then she was also able to get a $300 a month supplement to her income. and she also has a line of credit. That line of credit that she was able to utilize can be helpful in the future for unexpected expenses. And those unexpected expenses can arise, of course, as we all know, due to health or the home itself, or any number of other things. As expenses continue to go up and we're on a fixed income, those sometimes develop over time that we don't even consider. So that's what this woman was able to take advantage of, and it really helped her out tremendously. She was a little bit apprehensive, and so I sat with her and the family and consulted with the children as well to make sure they understood. Their concerns were, what would happen to my mom's equity if she should pass away? And the answer to that is, as long as the estate has been set up and they are the rightful heirs, they're entitled to her equity. So there's actually a very structured thing where they can list the home for sale. They have to actually dispose of the asset. So they would be able to list the home for sale and then sell the home, and then the remaining equity in their home they would be entitled to. And so that's one example of how this could help. Other things, of course, the equity can be used for, to pay for long-term care insurance, as you were told earlier, or you could actually utilize that to pay for life insurance. As a beneficiary, your heirs could also enjoy that benefit as well. So basically, the reverse mortgage concept is available for those who want to just have access to their equity, but not necessarily need it in some cases. And the equity that they have is, again, usually if you have a line of credit available to you, that line of credit has a growth component to it. So it'll continue to grow, and if you ever need it, you simply have to just call and let them know how much money that you might need out of your equity position, and the remaining equity remains yours. It's a contract. Once you close that transaction, the equity that's available to you will never be taken from you. Unlike a home equity line of credit that has an interest-only usually component, and it has a life expectancy of usually 10 years, a reverse mortgage does not. Once it's closed, once that equity line is available to you, it's always going to be available to you, as long as you are the primary owner of your home and you live in that home as your primary residence. As soon as the last individual, whether if you're husband and wife, and if the last person can no longer live there as their primary residence, then that's when the lender would want you to go ahead and take care of paying off that note. It can be done any number of ways, of course. Sell the home, or refinance the home if you're able to. The primary two ways that you do that. So, talk a little bit more about some other issues here. There are some expenses, obviously, associated with a reverse mortgage that are not associated with a HELOC or a home equity line of credit. The difference is, those are actually expenses are not really coming out of your pocket other than two things. The mandatory counseling, usually it runs $100 to $200, and it takes anywhere from a half an hour to 1 hour, and it can be done over the phone. There are a list of accredited counselors that you consult with to obtain that certificate. And other than that, the only other out-of-pocket cost would be an appraisal, and it would be an FHA appraisal. The appraisal has to be accredited by the FHA to issue that appraisal. And of course, if you're familiar with appraisals, it's based off of homes in a certain square mile radius of like kind and quality. And then you're entitled to a percentage of that to utilize as a number of different reasons, as I talked about. So it's really customized. There are no two individuals in this room that would have the same needs, of course. And so what it really requires is a consultation to understand your individual needs. And when I recognize those needs, I can actually develop a specific proposal geared towards your needs. And if you understand how it all comes together and it makes sense to you, then you can proceed with it. And keep in mind, it's always backed and insured by the FHA. If you wanted to, you could escrow for taxes and insurance and have your equity be utilized to pay for those expenses, or not. You could actually utilize the equity line to do that. Or if your income was sufficient enough to pay for those expenses, then obviously you wouldn't have to do that. In some cases, if people are credit challenged, the lender will help them with that. They'll make that decision for you. And they'll actually set aside some of your equity proceeds to disperse those for you in the future. And that actually helps some people out. Some people are actually happy with that. Because they actually, every year, when the insurance premium comes up due, or the tax bill comes in, they always try to scramble and come up with the money, because they're living on a fixed income. It's hard to set aside and allocate that amount of money for those bills. So sometimes the reverse mortgage is beneficial for that. So that's another option. I wanted to touch on a little bit here about how to live better and how to anticipate some of these expenses that might arise, and keeping in mind that the option is always there for you. And there's really you never want to wait till a circumstance arises and then you have to go after a reverse mortgage. It's best to plan in advance and utilize the benefits of a reverse mortgage now and have that line of credit available to you, so that when that situation that you didn't anticipate arises, the equity is there for you. That equity is set aside and it's yours to take advantage of. And I have some statistical data here, but you've already heard a lot of that earlier, so I'm not real fond of going over that too much. But really what it comes down to is the average person has just a little bit of money saved. A lot of folks, I saw some hands raised in the room. For those of you who have pensions, you're fortunate. Very many people don't. And then of course, most of us in retirement age have Social Security to live on, aside from their savings. And Social Security has we get a little bit of an increase, of course, annually, but not that much. And so it's really hard to justify getting by and not having any other backup plan. And if you've owned a home and you don't have very much in the way of a mortgage balance, or you have no mortgage balance, it could be very helpful to you to take advantage of that equity position to have in place in the event that you have an unexpected expense arise. Aside from that, there's actually there's another couple of things that I wanted to mention to you. I read this article this morning that was really somewhat disturbing. It's a new program that's out there, and it has some similar characteristics to a reverse, and that is it doesn't have any repayment terms required, but it's actually considered a contract of equity sharing. Has anybody ever heard of that? All right, I didn't think so. This is kind of new. And it's what they're doing basically is participating in the ownership of your home. I'm not a big fan of this product. It's actually fairly new, and you actually sign away a portion of your title, whereas a reverse mortgage does not do that. You own your home in its entirety, and you are in full control over that asset at all times. This particular program that I read about this morning, actually, they'll give you the money, but they'll own a portion of your equity, and then if ever you have to sell the home or you can't afford it any longer, they could either foreclose on you, or they could actually just, or at some point, they could actually become the rightful owner of the remaining of your equity if you didn't set aside your home properly in an estate. I've actually talked to a gentleman recently who specializes in estate planning, and we talked about how people could protect their interests and that of their heirs, and we talked about how a reverse mortgage could play into that. Because a lot of people aren't aware that if they don't have that in place in advance, that actually could go into probate. And so a reverse mortgage could be utilized to pay for the cost of a professional who could explain that to you and help you set up your estate as well. So those are some of the very reasons that you might want to consider doing this. Has anybody ever considered a reverse mortgage for their needs at any time?
I have a friend who is.
Yeah, okay. There's a lot of examples of where it could be helpful. A lot of people aren't familiar, and therefore they don't really look at that option. But home values now are at of course, as we all know, it's a great time to be a homeowner, and the equity continues to grow. And that actually is a very big benefit to you, because after you obtain the ownership of your home and you utilize some of the equity proceeds, and the line of credit will continue to grow over time, you still can take advantage of the property equity over time as well, because it will continue to grow. And if I was to show you an illustration of how that could come together, you'd see how the equity line would grow, and then of course the equity in the home would grow as well over time, and that would be a benefit to your heirs in the future as well. Yeah. Hi.
Is there a minimum or maximum amount of value of your home to get a reverse mortgage?
No, actually, there really isn't. The FHA has a maximum, which is $679,000. But there's actually, my particular lending partner that I deal with for these types of programs, they actually have their own proprietary loan product as well. And actually there it goes up to millions of dollars. So, that's basically about it. Does anybody have any other questions?
Are these typically 30-year terms on these mortgages, or?
Actually, they carry forward for the rest of your natural life. That's a good question. They don't really act in like a traditional forward mortgage. Once the reverse mortgage goes into inception, as long as you remain in that home, you can live there for the rest of your natural life, and that mortgage will never be extinguished.
So somebody could theoretically live for 40 years beyond,
That's correct.
and it doesn't come due until they pass on, is that?
That's correct.
Okay, okay.
Does not have a maturity. Any other questions?
Well, the example you gave where the woman wanted to make repairs to her home, so the home is valued before the repairs,
Yes.
and then she spends this money on the repairs, and then when the reverse mortgage is terminated, the house is, of course, going to be valued at more.
Yes.
So what they just pay back this kind of lien type thing, and whatever the current value of the home is, they benefit from that?
Yes, exactly.
Okay.
Yeah, there would be the expenses associated with the mortgage as well as the money that was dispersed. That would be, of course, the balance, and any interest that would accrue on a deferred basis as well. So as many years as they live there, until such time as they decide to sell. A lot of people actually take their existing equity position and they want to downsize, and that may be what you're talking about, perhaps if they're selling the home. I call it right sizing. You can actually take your existing position. If you wanted to, for instance, get out of this home that you were in, if you're empty nesters and it's just a large home, there's a lot of overhead and maintenance and upkeep, and you wanted to consider downsizing, you could actually take the remaining equity in your home and utilize that as a down payment and obtain a reverse mortgage for purchase. They call it a happen for purchase. It's a home equity conversion mortgage for the purchase of a new home. It's actually a concept a lot of people are not aware of, but it can be very beneficial because it can allow you to get into a smaller or more appropriate home without having any expenses. And the same thing would apply. All you have to do is make sure that you pay the taxes and the insurance and keep it up. So that's another benefit of a reverse mortgage that can be utilized for a purchase. I actually consult with realtors to help clients who are considering moving down here to make Florida their primary home from another state. And they sell their home wherever they're from. A lot of times it's to get closer to your children or grandchildren. And I had a situation like that very recently where I had a client from Illinois. They sold their home up there. They had $300,000 in cash. And they didn't want to utilize all of it because that was their nest egg. So they used about half of that to put down on a new home that was a brand new construction. And then they financed the rest with a reverse mortgage. And they were able to retain approximately half of that $300,000 to utilize to live on, as well as their fixed income, which is literally just Social Security. So I was able to improve their lives, get them closer to their family, and I considered that a win-win situation for them. They're very happy to have that opportunity. It's pretty beneficial.
Excuse me. Larry, when you were speaking about getting a fixed rate reverse mortgage and you take all the money out in a lump sum, does the interest continue to accrue?
It does, yes.
Do you ever get to a point where the mortgage is worth more than the house is worth?
It's unlikely to happen, and the reason for that is in October of 2017, the FHA took a look at that very subject. and they actually scaled back the amount of equity that the consumer was able to utilize. And as a consumer protection measure, they restricted the loan-to-value element of it, and people were able to take less of their equity to make sure or not make sure, but to hopefully prevent that from occurring. But to answer your question, in the event that the mortgage balance exceeded the home value, and then something should happen, you would not be responsible, nor would your estate be responsible for any deficit. So, that's an interesting point. A lot of people don't know that. And that's what the FHA insurance is all about. That's why FHA insurance is a mandatory part of a reverse mortgage. There's an upfront expense, unfortunately, there's an upfront expense for mortgage insurance premium payable directly to the FHA. And then there's also an ongoing maintenance component, which is an expense as well on an annual basis. And they're both payable to the FHA. But they guarantee that very thing. And it happens. I mean, if somebody took out a reverse mortgage, say in 2005, at the height of the market, everybody was using, some people actually used their homes as their personal piggy bank to live better, because values were very high at the time. And now, those people, some of them are faced with that dilemma. Their home is worth less than the actual value of the mortgage balance. And as a result of that, they're not really in any jeopardy. They can still continue to live there. They just can't utilize their reverse mortgage at all. But again, in a fixed rate, yeah, you can only take that lump sum out that one time. That's a good question. Well, thank you very much for hearing me out. I left some flyers up there with my name on them and my business cards. And there's actually if you're interested in having a one-to-one consultation to let me assist you with your individual needs, it's just an education process, folks. I just make sure you understand how it can benefit you individually, and then you and your family will decide if it's right for you. So I have a list over there, a sheet over there if you want to write your name down and your phone number or email address. I'd be glad to arrange a time where we can talk individually. If there's no other questions, I'll thank you all for hearing me out.
Good afternoon. Is this on? I don't know. It's on.
It's on now.
Good afternoon. Can you hear me all right? Because I really do not like talking on a microphone. This is the real me. I'm Amy Conti, and I am the Senior Resource Specialist for Chelsea Place Senior Care. So some of you I know, some I got to meet today. What we do here at Chelsea Place is we do have private duty home care. We have our Senior Daytime Activity Center, which we're at right now. And we have an assisted living in Charlotte Harbor. A lot of people don't know this. If you'd like information on that, you can always reach out to me and I'll point you in the right direction. But I'm also a Senior Resource Specialist. It's just the title, which I said before. Basically what I am available to do is if you need any type of referrals at all, you are welcome to call me at any time, and there's no charge. Actually, I'll take that back. It's a smile. That's all I ask is a smile. But there's no charge to you or the people who are referring. So say somebody's looking for assisted living, which on the 27th, which I will get to in a moment, we will have information on that. But I can get you directly to the source to save you steps. If you need some advice, if I don't have the answer, I'm going to refer you to who will be able to help you. So please know, if we can't help you with Chelsea Place, it's not all about us like soliciting our services. We really are trying to help this community, and we'll do whatever we can to help you. So on the 27th, I'm like right in front of this thing. I'll talk to a stranger on the street, but I do not like my picture taken. I do not like to be on a microphone for some reason. But anyway, so this thing is filming. Hi everybody. It be what you get, it's real. But anyway, on the 27th, which we'll have flyers, we have bags for you to take home with you today. We're gonna be having part 3 of our final series, and it's gonna be about assisted living, independent living, memory care, hospice, private duty home care, adult daytime care. We'll have professionals in the field. Even though Chelsea Place offers most of those, we still work with the community and we're bringing other people in so you can see each piece of the puzzle. Did I forget anything? Oh, and skilled nursing. And she left, good. No, so she won't get mad at me. But skilled nursing facility, it's just education. You know, you might know a neighbor, a friend, yourself, somebody who's in need. You know, it's good to be educated. And that's what we're trying to do for the community, because so many people, you know, they don't know where to turn. I mean, it's all out there. We live in a great community, so we hope you will join us on the 27th. And again, when you leave, these flyers will be in the bag. There's lots of great looking people on here. These are great people in the community. So thank you very much. And I just, if you'd like on the way out, if you need my card, it's my personal and business phone number. You can reach me anytime. It's all confidential. And on that note, I will introduce you to a wonderful lady in our community. Ivey Winkler is with the Charlotte County Veterans Benefit Service Office, and she knows her stuff very well. So I'd like to thank her for taking her time out on a Saturday to join us. So Ivey, welcome. Here, do you want the microphone? No. If you want it, it's right here. We all got one. We're very vocal.
Hi everybody, my name's Ivey Winkler. Can everybody hear me?
Yes.
Even the people in the back? Okay, my name is Ivey Winkler. I'm a Charlotte County Veteran Services Officer. I'm also an Air Force veteran. In the Charlotte County Veteran Services Office, we have an assistant, a manager, and then we also have a Veteran Services Officer out in Inglewood. So if you know of anybody out in the Inglewood area that's looking for services, information, referrals, send them to the Inglewood office on St. Hasso, or you can just call us. There are some flyers in the back, and they have our phone numbers. There's one on general veteran benefits, but today I'm going to focus on veteran pension for aid and attendance. You know, that's for folks in assisted living and receiving home health care, or something like this, an adult daycare service, okay? So, I'm going to go through these slides. There's about 20 of them, but I'm just going to skim through them pretty much. Just give you a general overview of veteran pension, how it works, why it's there, how do you get eligible for it. If you're not eligible for it now, it's good information for the future. But as always, give us a call if you have any questions. So it is a wartime veteran survivor pension. To be eligible, you must be a wartime veteran. Where am I pointing?
Is it not working? Is it on?
I don't know. Number one, turn it on. There we go. You know, a lot of people call it aid and attendance. Well, it's actually a pension. It is a wartime pension. There's different levels to the pension. There's a non-service connected wartime pension for fairly low income folks. Then there's a housebound pension for folks who are bedridden or can't leave the house for some reason. And then the last enhancement to the pension is the aid and attendance. But if you ask me for aid and attendance information, I'll go through the gamut with you. What is a non-service connected pension and survivor's pension? Like I said, it's for folks with a limited income or veterans who are more seriously disabled. They may be eligible for aid and attendance or housebound. It's just additional income. It's needs-based, so it's based on income, assets, and medical expenses. And these are the 3 different types of pensions that I discussed. The basic pension, again, that's just for somebody who's really low income. What is really low income? Call me and I'll tell you. Pretty simple. There's also a little sheet on the back of the form in the back of the office that goes over the maximum allowable pension rate. If you take a look at that rate and your income is lower than that, give us a call. We'll have a chat. See if you might be eligible for the VA to bump you up. I have people that are getting a pension of $49 a month. You know, I have people getting a pension of $2,000 a month. So you must be eligible for the pension before you can start getting those enhancements of housebound and aid and attendance. Aid and attendance. That is the additional benefit for those veterans or their surviving spouses who have an additional need for home health care, assisted living, or adult daycare, okay? Who need assistance with activities of daily living. You can also add aid and attendance onto if you're service-connected disabled and you require the aid and attendance of others because of your service-connected disability, we can apply for that. It's a slightly different process. It's actually a lot easier, but we can assist you with that. Additionally, if there is a surviving spouse whose veteran passed away from a service-connected disability and they're receiving dependency indemnity compensation, they're also possibly eligible for aid and attendance. Again, it's really simple. It's not income-based. It's just based on their need for the aid and attendance of others, either through home health care, assisted living, or here at an adult daycare service. So this is a bunch of requirements. You know, you have to be eligible for pension, and then you have to need it. The government's all about checks and balances, right? So they are going to want a doctor to fill out a form to prove that you need the help, right? And then there's gonna come a form where somebody's gonna certify that they're giving you the help, right? If you don't have both of those that match, then it's not gonna work out for the benefit. And that's why we're here to kind of help you walk through that. If someone is legally blind, that is somebody that generally is in need of the aid and attendance of others. Folks who are physically or mentally incapacitated, over the age of 65 with some needs, if they need help with activities of daily living, dressing, bathing, eating, walking, using the restroom, custodial care, those types of things. We're gonna want a doctor to certify that they need it, and then we're gonna want a facility or a family member, somebody, whoever's providing that care, we're gonna want them to certify them that they're providing that care. Qualifications. They had to be discharged from the military under conditions other than dishonorable. They had to serve at least 90 days of active military service. 1 day of that had to be during a wartime period. Wartime period. And I have a list, but it's also on this sheet in the back, the wartime periods. I have people that have missed it by a day on either end of the spectrum. It's heartbreaking. So they must fit within those days. We don't have a lot of folks after, 1980. I do have some catastrophically disabled folks, in their 40s and 50s who require the aid and attendance of others. So they would have had to have fulfilled their full 24 months of service. These are the service dates. So if you or your spouse or your friend, if you know that they fit within those criteria, or if you think they might be close, give us a call. We'll have a chat. Surviving spouses must prove that they were legally married to the veteran at the time of their death. It had to have been for at least a year. They had to be married for a year before their death. Okay? And we'll check all this stuff. Common law marriage does not exist in the state of Florida, unfortunately. There's, I think, a small handful of states right now that accept common law marriages, and then the VA will accept that. Net worth. So net worth used to be the biggest barrier to aid and attendance prior to October of this year, last year I guess, 2018. The net worth used to be $80,000. Well, now it's $127,000. So that gives people a lot more of a buffer to be able to get that benefit. The VA did build in what they call a look-back period of 36 months though. So if you moved assets around, you're gonna need to be be able to tell the VA what you did it for and what you moved. And then sometimes they'll either make a determination that you're just not eligible for the benefit, that you'll have to wait, or they do have penalty periods. And that's certainly something that we can chat about. If you fall within this, or you might have sold a house, or moved some assets around, or did a trust, or gifted something, give us a call. We can work with you. And then those are the other qualifying requirements, the medical need. And it should be an ongoing need for that activity of daily living. Rehab, you know, if you've got somebody that they're paying to come in and help around the house and help them take a shower because they broke their arm or they broke their hip, but they're only going to be getting it for 3 weeks. It's not really an ongoing medical expense. I can sometimes count it if their income is really low and they have a need for that reimbursement from the VA. But it's not going to be something that they get every year, and we're going to have to notify the VA of new expenses that next year. So certainly if you've got some high expenses one year, give us a call. We can talk about maybe a pension or some other income-based documentation that we can send. So these are the documents required. A DD-214. If you're a veteran or a surviving spouse and you don't have that DD-214, call me. I'll get it for you. Don't wait until it's an emergency. Don't wait until you need it tomorrow to get it. I can order one from the National Personnel Record Center. They usually take about 30 to 90 days. Sometimes they take 10, which is great. There was a fire at the National Personnel Record Center in 1973. If you go to the archives.gov website, there's actually a really neat video on there about the fire that started in 1973, the length of time that it burned. It destroyed millions of records, right? But luckily, they've been able to use backup records from the Navy or the Army or the Marine Corps. They'll go back to historians. They'll be able to recreate those records. So for a lot of our folks that were in World War II and Korea and the early stages of Vietnam, their records may have been destroyed. So we need to be able to order those now, just in case they were damaged or destroyed, so that we can get that back up, all right? We'll need a marriage certificate if the veteran is married, because they do get additional income for having a spouse. It is a higher rate of pension. If the veteran passed away, we'll need their death certificate. We actually need a long form death certificate. And I didn't really understand it, and I like to understand, you know, why do you need this thing? A death certificate shows that they passed away. Is that not enough? So I called the VA and said, why do you need the long form? It costs $10. They're like, well, we want to make sure she didn't kill him. Okay, there you go. I guess you don't get the pension. We're gonna need an assisted living facility caregiver letter. If somebody's using the services here, it's just a letter stating what type of services are provided, as long as we're getting 2 of those activities of daily living. So a lot of times in a place like this, transferring you would get, helping to ambulate, getting in and out of a walker, getting in and out of a chair, bathing. I know they provide bathing services here. Those are activities of daily living. So those medical expenses for getting services like this will count towards the aid and attendance benefit. Obviously, if they're in an assisted living facility, we would get the ALF to state what they're providing. Senior living does not count as an ADL. If someone is in a senior living facility and they're paying somebody to provide medical assistance, we can really only count what they're paying that person to come in and help with. We can't count room and board in senior living. And then if it is a married veteran and their spouse, there's a separate VA form. There's gonna be a copy of the form on here that you're not gonna be able to look at. It's pretty blurry, but your doctor fills it out. It's this one. It's just asking what's the diagnosis. The biggest thing on the 2680 is, does the veteran or spouse need assistance with bathing and tending to hygiene needs? I try to get people out of the mindset of just black and white. You know, bathing and hygiene needs. Are you setting up the shower? Are you sitting there making sure they're not falling? Are you helping to make sure that they brush their hair and they brush their teeth and that, you know, they've got everything that they need? Do they need help with dressing? Well, are you making sure that they can button their pants, that their shoes are on? Are you helping them to get dressed? Because I guarantee you, you're getting charged for it, right? So make sure that your doctor puts that on here, that they need help with that dressing and bathing and hygiene needs. Additionally, it's asking if the veteran requires nursing home care. A lot of times it's no, but they can put a remark in there that says they need custodial care, or that they need to be in adult daycare, or that they need to be, you know, tended to at home. The VA has folks that are looking at these pension claims, and a lot of times they're veterans, their grandparents and parents are veterans, and so they're looking at these forms and saying, well, it says no, but I see here that the doctor is taking the time to put on here that that person needs help, that they're needing, you know, additional assistance. So, and then this is a statement as to level and cost of care that would come from an assisted living facility, just detailing what they need. And this is very similar to a caregiver form, something that Chelsea Place would fill out. What are they helping with? Dressing, bathing, eating, walking, using the restroom. If someone was in a nursing home, there's a special form. Sometimes I use these for assisted living facilities. Some ALFs in the area don't really want to detail what they're doing for the veteran, so I try to get them to fill this out. But I'll work with anybody if you're having issues with a facility or, you know, have questions, just call me. This is that attendant affidavit for in-home health care, but we would also have someone like Chris fill it out for here. You know, what are they doing for that veteran? Are those checks and balances, does the doctor say they need it, and are they getting it? The big one, proof of assets. Remember, we need to be able to show that they're eligible using income, assets, and medical expenses. So when we're looking at that $127,000, we're looking at cash. Why would you tell the VA how much cash you have under your mattress? But CDs, stocks, bonds, investments, IRAs, annuities, checking, savings. If they own a second home, if they own another property, if they own land, and the VA has just changed their rules. If their primary residence has more than 2 acres, can they parcel out part of the property and sell it? Because really, at its heart, this pension program is paid for by taxpayers. So the VA wants to be able to prove to the taxpayers, hey, this person doesn't have any other way to pay for these services. We need to be able to supplement their income. So they are trying to be good stewards of the taxpayer money while also doing what's right by the veteran, who is also a taxpayer. So we do require proof of income as well. I like to see a Social Security award letter because it shows me how much you get for Social Security, and then it also shows me how much you pay for Medicare, because not everybody pays the same amount for Medicare, right? The VA is going to be able to see that anyways. They use a program called Share. It literally shares information, but I like to get it right when I send it in. I need to be able to know what kind of pension you have. A lot of folks, you know, they work for the state or they, you know, retired from the sheriff's office. I need to see what that additional income is before deductions, because the VA takes the gross. They don't take, you know, after taxes, after they take out, you know, for other expenses. Some take out for Blue Cross Blue Shield or something. I need to know what it is at the gross. If you're receiving any interest from an annuity or anything like that. And then if you have a rental property, there's a special form to fill out. But usually by the time a veteran or a spouse files for this benefit, they've gone through the majority of their assets. They've got very low income, and it's a pretty easy thing to file. So the other documentation required is proof of your ongoing medical expenses so that the VA can count those. They're spending down your income, right? So you show your income is this high, and you're above the maximum allowable pension rate, but using those medical expenses, those recurring monthly medical expenses, it whittles away that income, some people to zero, less than zero. They're having to dip into their savings. Their family members are helping them. So what the VA is gonna do when they see all of these medical expenses is they're gonna say, oh, your countable income is zero. We're gonna give you the max amount. They just changed it, so I haven't quite memorized it, but for a veteran with one dependent, it's $2,230 a month. And for a single veteran, it's $1,881. And for a surviving spouse, it's $1,209 a month. So what I tell people to think about is that this is a reimbursement. You're showing the VA how much you spent, and they say, okay, we're gonna reimburse you up to the maximum amount, which is what those are that I just went over. And they're on that list in the back also, all right? And again, there's that list. So a single veteran is $1,881. A veteran with a dependent is $2,230. And then for a surviving spouse, you've got that $1,209.
Yeah.
Okay. That went fast. Does anybody have any questions? And then, is anybody a veteran in here?
I got some questions.
All right.
I got the paperwork already, I got a couple.
I don't know. Do you want to ask me now, or maybe other people have the same question?
There's a couple things on the form that, so I'm probably better off to get that.
You want to call and make an appointment to follow up?
Are you gonna be here after this?
I can hang around. Yeah. Any questions? Yeah. Thanks for having me.
All right, guys, I know that's a lot of information. Man, 2 weekends in a row. I know if your brain's swelled, mine is too, because there's a lot of information, a lot of great content. If you guys have more questions, please let us know. I know a lot of this stuff, you know, you might get a little bit of VA stuff here, a little Medicare, Medicaid, a little reverse mortgages, but you're trying to piece it all together. And that's where Amy was talking about earlier. That's our goal, is to help you walk through that so we can sit down with you guys and say, okay, go see this person, okay, go see that person. Let's help you understand where you're at and what you need. So if we can be of service to you, please let us know. In your bags, if you haven't, you may have gotten some last week. There's some more for this week. We have the information for the 27th, but we're going to cover a lot of information on the 27th about the different types of care. So now we've learned what my loved one might be going through. We've learned about the finances and how to make the legal plans for my loved one. And now we're going to talk about what types of care are available to me, and how does that work? What does it cost? Who pays for it? Things like that. So we're going to talk about that on April 27th. I may or may not be here because I got a little one on the way. May 11th is our due date. We got a little baby boy coming. So if he comes early, I may not be here. If he doesn't, I'll be here. But just thank you again for coming out. Thank you for your dedication. Thank you for staying 4 hours, 2 weekends in a row on a Saturday. It means the world to me, so I really appreciate it, guys. Thank you so much, all right? Have a great weekend.
We're going to do the raffle. Didn't you forgot to tell her about the car? So you have to be present to win, so your chances are bigger because you stay to the end. Let one of the people look. And you.
And we got 0101. 101. 101. All right.
Right here, Rocket?
101.
101?
All right. You can do it for me. Just don't, are you cheating? No matter if you cheat, you're gonna pay. All right, we got 112. 112. All right. All right. So now these are for today's gift baskets, right, Amy? We have one. What is there a master one next week?
No, you'll have to come and find
Oh,
out.
I have to find out. She's always full of surprises. You never.
On the spot. No, we are gonna have some nice prizes next time, but more importantly, good information. So please RSVP if you can. If you can, it's okay.
That's all right. And guys, thank you so much for your time today. You guys have a great rest of your weekend, okay?
Thank you.
Enjoy your snacks. So where are you heading? Oh, back home? Yeah, back to home. Go back home. It was good seeing you. You too. I'm glad I got out. Yeah. Better. Yeah.
Just ask them to average out how much they usually charge per month. Because this keeps you with a lot of income. So I'm just trying to work with all that.
A lot of times when we see it, phone call north, it's in the bathroom. This emergency comes down here, it's like, hey guys,
Thank you. Okay, so, you can even qualify as a walk-in. But yeah, all those two more of these guys. Alright, and then as long as they're gonna mark that they help for manipulating and using the restroom, getting up and down. And everything else is good, so when you get the doctor to fill it out, then you'll call them and we
some people like, we have a lady who drives here. I would say at least half of them.
It does. You gotta try to stay on top of them. About 4 to 8 months on average. Yeah, they do reimburse you all the way back to March when we send the paperwork.
Thank you for coming. You're very welcome.
You always put your tables together, like 8 tables, people that are all like minded and cognizant, so like they're all talking, catching up, and they walk in, guys, catching up.
Yeah, well, and if they start to help her, if she takes a shower here once a week, it should be the
Appreciate that, yeah, that's the thing. I know, it's like when you see a 4-year-old home, and now they're like, Thanks, guys. Thanks for coming.
Thanks for having me. I was gonna get my phone and hand it out.
I noticed that there's like,
I'll get you another one. Really? Yeah.
I just have to sit there, especially when it's big. You feel lost.
Here's one.
I may be able to.
Thank you.
Well, there's what I need for this.
Thank you, Franny.
And thank you guys. You guys have, I see Bryce.
Hi, Pam. Hi, Debbie.
Bye, honey.
4 hours a week per day.
I mean, I would be.
Yeah. You don't want people to
Right, exactly. Right, exactly. So we have that. So we do a full launch. We have activities all day, 5 music every day. We're about to have a It's super active.
It's all right, I know that he, but still, I'm very, I'll ask him. Wait,
It's a very active environment. So there's no down. It's not like you come in and sit all day.
watching TV.
Right, exactly. It's like when we walk in, it's just boom, boom, boom. And then it's the next up to one, two, the next.
Yeah, that's what they need.
They're playing poker.
Keep the line,
Yeah, exactly.
keep the line going, you know?
You dance every day, they all have music, and they dance and they sing.
Like any other muscle, the line is like any other muscle. You don't use it, it's gonna atrophy.
We were even just talking about just looking for the study.
All right, sweetheart.
I'll definitely keep you guys in mind. Yeah, I'll talk to you soon. Ben, good luck with the baby.
Appreciate that, thank you.
He only said that. I'm joking.
Thank you for having me. I appreciate it.
Very much.
And it's good for me to see you.
Yeah. Anything you ever need, just reach out.
Okay, same with you.
Thank you.
Bye-bye.
Thank you.
Bye-bye. Yeah, thanks. I'm Dave. Nice to meet you. Debbie, nice to meet you. Thank you. Okay, if I can do anything to help, let me know. And if you need anything, insurance.
I took everybody's card.
Good, good,
Thank you
great.
so much.
Okay, thank you.
Think about it and.
Bye. Yep, you too. Bye-bye, nice to meet you again.
Yes. Okay, perfect. Yeah. Yep.
The cute little lady up with you, and I got another one for extra.
Bye. Thanks again.
Very nice to meet you.
Sweet. Very nice to meet you.
Enjoy the rest of your week.
Take
You
care.
too. I was listening to this lady, there's two ladies that care for the parents. So,
Yeah, the two little ladies.
it's funny, you don't have to do it, you don't have to.
What a sweet man.
Hello. You help with something?
I'm joking. Right up here, a whole bunch of glasses. Find out if any of those are it.
No, we're good.
Yeah,
I'll turn it in. Yeah, it was here. It was in the front. And you know what? And then I'll make, last week I made a copy of the sheets.
Oh, that would be great, because I'm actually the one who would put that in.
Oh, I'll make it for you. It was here. It's a retractor. I think it's yours.
My mom used to work at a church.
Yeah, ask me.
Oh, like church, you get on the aisle, I'll see if
I'm joking.
We're learning, we live and learn. That one's me.
I told ya. That was.
Are you all the weekend?
I haven't got that.
Are you gonna, when you have the open house, are you having refreshments or you're just having an open house and they just come and look? No, I'm having.
I was really.
Yeah, she's doing good.
Yeah,
She's just
Friday does. I'm done. Maybe it's just some cookies.
it's like kind of, I don't know how it's, I don't know how it's,
It's uncomfortable.
I know. So when she went on a shirt there, for the most part, she wouldn't just do this. And so we went out somewhere, like to a birthday party, and we went to put the shirt on. Oh, I gave it like, I'm like, whoa, like what happened? When did that happen? I was
Yeah,
like,
it just
she's like for that third trimester.
I didn't even get to see Sam and say goodbye.
So it's, no, she's ready, you know, I'm trying to get the house done now, like, you know.
One's
So-
yours.
Final next.
One's yours though. Did you know what I mean?
Yeah.
I got you. One was on there.
Anything I can help with?
That's what I don't know, Deb, do you need more help? You need help with the chairs?
We do need to put the table and chairs back, but we need to do that when we're done.
But Amy, you know, do you have any back issues or anything? She can't